Hey everyone, welcome to Sum Zero. We are back with Anthony Zhang from Vinovest, and we're here to talk about wine and the markets. Anthony, great to have you back. It's been quite a tumultuous last 3 months. The last time we chatted, I think it was December, and since then we've seen inflation obviously tick up pretty significantly, exacerbated by this invasion of Ukraine. And so, we just thought it'd be helpful for you to give us an update on the wine markets, how they've been impacted, and then we can dive into some other stuff that you've been doing that I think is pretty exciting. But I'm just curious to get your reflections on the state of the world and how it's sort of impacting your little space within the broader markets.
Yeah, absolutely. And yeah, Divya, thanks for having me on again. Always enjoy our conversations, recorded or not. So, yeah, I think since we spoke, it's been a little over a quarter, and the world is certainly in a much more uncertain place. I think with equities and crypto and most major markets plunging, we started to see a lot of people seek for shelter, right? Whether it be physically, but also from an investment standpoint. And the wine market, as we've kind of observed over the past two market cycles of, the dot-com boom and crash, as well as the most recent one in 08, 09, we've seen wine be somewhat negatively correlated in the beginning, but and also having much less volatility than the market. So that's a little bit of what we've seen in most recent months, whereas stocks are most certainly down on the year. The average wine portfolio is up around 5.6% on the year. I think it's really because there's a lot of different factors that are driving wine markets up. Number one is continued consumption. Good times or bad times, people are most certainly drinking and drinking more. And then secondly, we just had a pretty rough winter in a lot of wine growing regions where frost is shocking a lot of the potential supply. And in anticipation of that, in anticipation of lower yields this coming year, a lot of folks in the market are looking to actually almost stock up and buy as much of the wine that's still available on the market as possible, in case that we might not even have a 2021 harvest.
So yeah, let's talk about, there's a huge conversation going on in the world about supply chains, how they're being, it used to just be about COVID. And I think your market is interesting because, you obviously have the weather to deal with. To what degree are there other elements of the supply chain, be it shipping, or, I don't know, like to the extent that some of the sort of governmental regulations come into force in terms of how products are, sold across the globe, across jurisdictions, like what are those dynamics, and how have any of those changed over the last quarter, in your eyes?
I think in terms of those supply chain issues that you mentioned, it really started in the beginning of COVID and has not gotten much better, right? It's tough to get things shipped, right? The shipping costs are much higher. And then with the inflation that we've seen in the past year, and especially in the past quarter, that's rising the cost of a lot of the materials that the wine industry depends on, right? Whether it be something like glass for the wine bottles, to labor, to wood for actual buying new barrels, and labor for being able to fix those things and those capital needs. They're getting more and more constrained. So those are other things that we are hearing on the ground too, that is pushing prices up. At least it's going to push prices up for for this upcoming vintage of wine as well.
What is the biggest cost component of making wine? Once you have the land, like what's kind of the next, what are the biggest, maybe the top three kind of cost inputs into making wine?
So after you have the land, actually being able to lay down the vines and have your first harvest that actually produces grapes is almost 5 years, right? It takes a while for these vines to mature, for them to dig down into the soil to actually be able to produce wine that can be drinkable. So that is a huge time investment. And that's time investment that requires people to maintain it, right? And throughout all the 4 seasons as well.
Yeah.
So that's number one. It's the human capital. And then when it actually comes to production, we're really talking about the raw material costs, right? It's going to be things like cork for the bottles. It's going to be things like the people who are putting into tanks from the initial tanks into the barrels into the bottle. Those are all hard costs, and sometimes these materials get broken and need replacement. So that's the second one, and then the third one is just the labor to do all of that and get it shipped out so they can actually make revenue.
Yeah, I mean, it's funny you mentioned even the barrels. Like we hear a lot at least in the U.S. about lumber going up. I would say lumber was almost like the number one. That was like the first thing that people were reporting about as far as how inflation was hitting, like real people, kind of on an everyday sort of normal person basis. And it sounds like some of that's affecting kind of barrel pricing as well.
Yeah, it certainly is.
The labor part, I think everyone can sort of relate to that. Like that's certainly a problem. And then like from the standpoint of how the wineries or vineyards are kind of passing this cost inflation into the ultimate price that they charge for the bottles, is it sort of a one for one kind of thing where if input costs go up 10%, kind of the bottle pricing goes up by 10%, or have they tried to cushion some of that where are they seeing any reduction in margin because they're not able to pass pricing through, or are they having no problems with passing increased pricing through to the end user?
Yeah, they certainly are adding in a cushion because in addition to the added cost of material, those costs per bottle, they do have their fixed costs, right? A tank is going to run for X amount of hours, no matter how much grape juice is in it. So those fixed costs also add to a higher base cost for that bottle of wine. And then on top of that, you have the lower supply, right? So all of those things are leading to more than just a 10% increase year over year. Sometimes it could be even, this year compared to last year, some wineries are releasing at like 20-25% above, and they're selling out.
What about oil? So oil's obviously gone through the roof. I forget where oil's at right now, but not too many weeks ago we were hitting 140 a barrel, I think, and dropped down to below 100, but still far higher than historical levels.
Yeah.
That I'm assuming is mostly impacting shipping. But does oil kind of just overall energy costs, in terms of just the nurturing of the vines and all of that, is that a big cost component for vineyards?
Yeah, I mean, oil affects everything, especially when we're talking about harvest time. Thankfully, right now in the winter, there's not a lot of machinery being operated. It's just the vines are dormant, and in terms of personnel, not much of that is happening, right? Nothing really happens until harvest. So if this oil surge continues into, let's say, July, August of this year, we're certainly going to see a lot of impact that will affect the prices that we're seeing next year in wine.
Yeah, it's incredible. So the 5% year-to-date return that you referenced earlier, is that or maybe you can just tell us, like, is that an aggregate number, or is that a specific, is that the blue chip kind of vineyards? What is that number driven from or driven off of?
Yeah, that's an aggregate number of all the wines that we're tracking. So, this would be almost 1,000 of the top vineyards in the world.
Wow. And if you broke that 5% down into where the contributions are coming from, or if you looked at sort of the more established vineyards, are those producing even higher returns, or where are we talked last time about the fangs of the wine world.
Mm-hmm.
If you isolate those, how are they doing in the
there's certainly a few regions that are outperforming the rest. So California, and then Rhone, and then Burgundy. Those are the three that we've seen that have well into the double digits. Some I think are 12, 15% up on the year already.
Incredible.
And those have definitely been leading the pack, whereas some others like Bordeaux have been a little more flat. But yeah, we've certainly seen regions that are, I think, a little bit more impacted by the weather,
Yeah.
have started to see those price surges already.
So if you just wanted like broad-based like index exposure to the wine industry and you wanted that 5% return number as sort of this aggregate, what would you have to, could you buy a piece of all of your wines? Is there a way to synthetically create kind of a Vinovest like portfolio that consists of everything you guys carry?
So we don't have that offering available to retail investors today, but we do have more institutional offerings that offer more so traditional fund structure that can help investors get that exact exposure that you're talking to, right?
Yeah.
Broad-based exposure, constructed portfolios that have certain percentage allocations to some of these key regions, and you pretty much don't need to worry about it from there.
Have you seen any like, I guess what, as of now, like looking at the world today, we're in kind of mid-March here. What are some of the more interesting investment opportunities you're seeing in wine right now? Given that you're, you know kind of where bottle prices are changing for all the different vineyards, are you seeing opportunities that you think are just undervalued for whatever reason?
Yeah, I think it's been surprising that a lot of the up and coming regions that we were really excited about a few years ago just have not, I think, been as explosive as we thought they were going to be. So regions like in Latin America, for example, we were looking at a lot of pretty explosive prices, say 2018, 2019, but they haven't really outperformed the market. It's really been clients and investors and consumers still sticking to those blue chip regions and really just sticking to what they know and love. I think it's for a couple of reasons. I think with countries like Argentina and Chile, which are two of the top producers of wine in that continent, they're still developing countries, and I think they've been definitely hit harder than most in terms of those export and supply chain issues and getting their wine out to a broader audience. And the domestic audience for their wine, given that it is at a pretty high price point, is just much smaller. Whereas more developed countries like the United States or France or Italy, they still have their distribution lines, and I think they're a little bit more established. They've been able to still get to the global audience that they need to be able to continue to fuel their prices.
Yeah, maybe in like times of greater turbulence, there's a flight to quality in wine, just like there might be in in the public markets.
I think so. I think we are seeing a little bit of that right now.
Makes sense. Any new trends that or themes that we should be looking for as far as the industry goes?
I think it's definitely hard to ignore what we've seen last year with the explosion of NFTs. I think a lot of wineries are starting to realize that, hey, this is not a gimmick, right? Real brands, global brands are starting to see how they can use that to be able to further engage their consumers. And we're seeing a lot of folks see that as a way to also engage younger consumers. Wine, especially fine wine, has a problem of, right now they're selling to their prime audience, which is very wealthy folks who are probably in their, maybe their 50s, late 40s. And in the coming years, they're most likely going to be buying less wine and drinking less wine. So this sort of new technology and way to reach, I think, a younger consumer base is something that a lot of our winery partners are discussing and interested in learning more about.
Yeah, let's talk about NFTs. Very exciting topic. I don't know how much you can say, but can you maybe give a hint of how the NFT movement or just the technology applies to wine, and how you guys are at least thinking through what that opportunity means, for Vinovest?
Yeah, I think if we start from the winery or supplier perspective, it's interesting for a couple of reasons. I think firstly, it gives them transparency into where that wine is ending up, right? If you're just giving it to a distributor or a wholesaler who then gives it to a retailer who then sells it to the end consumer, they have no idea who's drinking that bottle and when. I think the use of NFTs can help to have that sort of straight line of provenance that can help wineries be able to see who that end user is, be able to reward those end users the same time, the same way as people do with wine clubs today, right? I think you can see new sorts of digital communities being formed around that technology. And I think number two is given the similar to the art and music market, a lot of the creators are really left out of those secondary market sales and action, and they have no upside to it, right? If you sell to a broker as a winery, they'll take your wine, they'll buy it, they'll put a commission on and sell to the next person, and who knows how many times it's sold as the wine appreciates in value, and the winery gets nothing.
This is going to sound so out of left field, but my wife dragged me into watching the Pam and Tommy.
On Hulu.
On Hulu. Oh yeah, sorry, it was Hulu.
Yeah.
And maybe I was too young when this came out, but it's amazing how big of a bootleg market there was for that video. And it was incredible to see that ultimately it was like some kid who ran this weird like webcam business who bought the rights for this video for free. It's this whole thing about chain of title just got me thinking, because I just literally was watching this yesterday and was kind of amazed by what was happening in the 90s with bootlegging. But is bootlegging, or kind of like, is this a problem in the wine industry where you have some people who are producing fake wine or wine that's mislabeled, where
it certainly is a big problem.
Does that happen a lot?
I think especially on the high end, right? Because it's so sought after. There's such low supply. And if you look at any high-end good in the world, right, whether it be like Louis Vuitton bags or high-end sneakers or cars, sometimes people are faking them, right? Whenever there's more demand than supply, someone's going to try to find a way to make money. And the wine industry is no exception. So it definitely happens a lot, especially, it's hard to tell, right? You're just looking at a bottle and you can't really see what's on the inside, right? And you can maybe be able to sleuth your way through it and inspect the labels and the cork and try to chase your chain of custody all the way back to the supplier through invoices. But that's so much work for a regular consumer to do. And even at these super high-end auction houses like Sotheby's and Christie's, it's still buyer beware. There's no sort of refund policy. There's nothing that the auction house can do, even though if they make their best efforts to verify it as well.
I mean, it almost seems like we're, like the whole world of like physical goods could benefit from some sort of digital, certificate of sorts, and, call it an NFT, call it what you want, a deed, a virtual deed. I think that makes a ton of sense. You had mentioned earlier that for institutional customers, they can create, essentially a portfolio that would consist of like everything in the Vinovest platform. Tell us a little bit more about just the institutional customer, the institutional offering, and also I think you guys have launched a fund recently, or looking to raise capital for that fund. If you can tell us about that, that'd be great.
Yeah, absolutely. So that is the offering that I mentioned, where investors or accredited investors can have that sort of broad exposure into a pool of wine, still using the same underlying technology, storage, and insurance protection that our retail investors have on the Vinovest platform, but it's in it's in a format that's more familiar, right? It is a private security. It is, they're buying ownership into an entity that owns the wine rather than them owning the wine, right? So that, I think, is kind of the key difference. And really the clients that we're talking to are excited about this, not only because it's a very streamlined way to diversify into this hard asset where we're the ones managing all the heavy lifting of storing it, right, of pricing it, and then finding liquidity for it, but also because it's new, right? It's something that they can use as a hook when talking to prospects, when re-engaging existing clients and being like, hey, we have this new offering. We're different than every other RA in the world because we're not just offering the same sort of basket of options that everyone else can give you.
Is that fund set up where there's a management team that's actually picking the specific wines that go in the fund? So essentially, from like the LP standpoint, it's a set it and forget it. They don't like they're not managing that portfolio. They're just trusting that you guys.
Exactly. It's a set it and forget it. We've got our IC in our team, as well as our technology that helps us make these decisions.
Got it. What if you can just maybe walk through the terms of just what that fund structure looks like? Is that a typical sort of 2 and 20 fee structure, or how have you guys set that up?
Yeah, it's a little bit more advantageous than the 2 and 20 details. And for folks who are interested in listening, happy to kind of give the full sort of like PPM and details after. But yeah, it's very standard in terms of the terms that investors are used to and familiar with, but we're just working with a completely new asset class.
Got it. Is there a lockup there? Like what's the sort of commitment that investors would be making?
Yeah, this one does have a lockup. I believe it is 3 years. And that is the commitment that people need to make, right? Just like it takes time to grow a tree, it takes time to age wine, right? And nothing in the world can help speed that up.
Well, it's also good because you don't want a mismatch between investor expectations and the asset that you're ultimately investing in. And I think forcing people to kind of commit to the asset class over a longer period of time is probably in their own interest. Otherwise you'd have folks like day trading this stuff, which doesn't work when you're dealing with a market like wine. So I totally get it.
Exactly.
That's really exciting, though. I'm glad you guys are putting that together. Lastly, just curious if maybe we can just touch on some of the stuff going on with Ukraine. Does that remotely impact? I mean, obviously there's kind of the inflation story, which we talked about, but is there any other connection between wine or the global wine markets and what's going on in the Ukraine?
Yeah, I think it's obviously an incredibly terrifying situation over there, and Ukraine does produce a lot of wine, but it's not really in that sort of like blue chip wine category. However, there are there's a lot of Russian oligarchs and multi-billionaires that probably love a lot of wine and are holding a lot of wine, and I think that the fear is that many of them may try to like dump off their assets, right? But I think when it is compared to the rest of their assets that they have, maybe like a multi-million-dollar painting or super yacht, it's their wine collection is most likely on the lower side of their priorities to liquidate. And it's also very hard to liquidate when a lot of the main channels that are for wine trading, which is for the US or the UK or countries that are sanctioning Russian bank accounts, makes it very difficult for them to sell off those holdings. So I believe for the most part, the supply that these sort of like Russian folks have is going to stay out of the market and not really impact the fine wine market at all.
Yeah, that makes sense. What about I'm just curious if the adjacent countries, the Eastern European countries, where do they stand in terms of the wine market? Are there a lot of vineyards of any relevance, in Poland and Belarus and all those neighboring countries?
Yeah, none in those two countries. I think the closest ones would be like Austria and Germany, and they're still like, I would say like under like 2 to 3% of the market share.
Yeah, that's helpful. I think the oligarch story is a fascinating one. I mean, these guys are just like they're probably like racing to figure out how to hide all of their assets. Unfortunately, with large mansions, it's kind of hard to hard to put them under a blanket, and so I guess to the extent they have sellers, maybe they're sort of in limbo for the time being. But I hear your point. It's not like they can flood the market with supply because it's just not as liquid a market.
Yeah.
But Anthony, this was great. Anything else before I let you go? We just wanted a quick market update from you. So
yeah, no, it's really been fascinating it's been fascinating to kind of observe the market, especially we've been in the bull market for so long, so it's kind of just been up and to the right. But now we're really starting to test the the fundamentals of the asset class, right? Like why is it having a negative correlation to the market? And now we're kind of seeing some of that show through, which is I think really beneficial for our our current clients who have believed in that from the beginning.
I would agree. I think this is exactly the kind of stress test that you want to tell the story of wine, and like why it should be part of people's portfolios. But with that, Anthony, we'll let you go, and we will hopefully reconnect in the next couple months and take a look back, and also just get your updated thoughts on kind of the market as you see it.
Amazing. Looking forward to that next conversation, and hopefully we will be in rosier times globally.
Appreciate it. Thanks, Anthony.
Awesome. Take care, Divya.
Bye.